I'm Phil Larmon,
And I'm Douglas Borthwick.
and this is Old Men, New Money.
Well, we're today to have our guest. It's Jay Bluestine from Blue Square Wealth. Jay, I've known for quite some time. It's got to be at least 5 or 6 years now. I ran into him at Coin Conference, and we've been chatting back and forth ever since. And I think Jay's a great guest for us because what he's doing is he's taking new money, like Bitcoin, and finding ways for people to invest in it with less volatility in paper form. But really, Jay, why don't you introduce yourself to the audience and let us know all about your background?
Sure. Phil and Doug, thanks for having me. And I can't believe it's 5 years, Doug, since you and I, time flies when you're having fun. I come from the traditional investment world. I was a UBS, Smith Barney / Morgan Stanley, Merrill Lynch guy. In 2018, we started Blue Square. When I worked my majority of my career, we've always been risk managers. So we've always used sort of cash to risk manage or what we'll call risk assets through different algos and the manager overlays. And in 2013, a dear friend of mine was peppering me incessantly about this Bitcoin thing. And when we started Blue Square in 2018, some of our clients were starting to invest VCs, private equities in the space. And so we started to get involved in the ecosystem and took about a 2-year deep dive in learning about it. And we've spent the better part. We launched recently digital asset division. However, in 2022, we launched a risk managed digital asset hedge fund. And we've just been looking for ways as a regulated entity to give people exposure to the underlying asset, but do so in a way that allows us to hopefully mitigate the drawdowns, which most investors aren't going to sustain 80% drawdowns, and then participate in as much as the upside in the asset class as we possibly can. So we're extremely excited about digital assets in general. We're extremely excited about the regulated ecosystem that we've created and are creating, and we think others need to create. And so we really look at ourselves as a bridge, right? So TradFi into DeFi, and it's been an exciting time to say the least. So hopefully
Now,
that's helpful. I should say, I'm almost 30 years in the industry. So I've had my trials and tribulations, and I liken back to what's going on now to the internet bubble, right? So this new wonderful thing is being created, and so few people understand what it is or what its value proposition is. And I think it's hard for us to even really know long term what is going to be created. If we look back at the internet from 1995, no one knew Uber was going to exist, as an example. So lots of exciting things to happen over the next 10 to 15, 20 years, and lots of opportunity, in our opinion, to create value, and both from a financial standpoint and from a application standpoint.
I'm a Morgan Stanley Merrill guy too, so that's exciting to know that in your background. Now, so hedge fund, right? I think a lot of
Yeah.
guys hear that and they think, oh, that's only for wealthy people. People don't even know how to invest in a hedge fund because they read about them, but they don't ever know how to invest in something like that. How does someone invest in a hedge fund?
Yeah, so just to take a step back, hedge fund was our first foray into the space, because at the time when we started investing, and we started investing in Bitcoin as our first jump in, to do so in a way that would be accessible and productive for our clients to risk manage the assets. We were using GBTC at the time, which is now an ETF, but back then was an ETP. It was somewhat of a closed-ended fund, and it would trade at a premium or a discount to NAV, and that's a very hard asset to risk manage. So, a hedge fund is a traditional structure that traditional investors are familiar with. And to your point, it is true that it is for a higher net worth individual. In this instance, you need to be either what's called a qualified client, which is someone who has 2.2 million or more in investable assets, or a qualified purchaser, depending on what type of hedge fund you're investing in, because these digital assets, at least Bitcoin, is considered commodity, and that's the litmus test for that. I know in our instance, we're at a $250,000 minimum, and for some people that's not realistic, and for others it is. But that's one of the exciting things that we're doing, is we're working on creating solutions for regulated solutions that look and feel like traditional investment vehicles that people are familiar and comfortable with, where we're hopefully creating the most secure environment we possibly can. And that's where I spend a lot of my time. We could talk about like how to invest and whatnot, but that's what hedge funds are in general: a limited partnership uh, where individuals or institutions can invest in a pooled vehicle which means it's discretionarily managed, and all the money is pooled together, and you have a fund manager who's running the capital in some strategy, and the investments are typically run by what's called the general partner. And the general partner is the person who has the power and attorney to fiduciary responsibility as well to implement and hire and fire or manage the money. So that's what a hedge fund is, and that's why that was our first step into the ecosystem once we realized that GBTC wasn't the way, because we really needed the flexibility to access the ecosystem, access things like, and maybe we're going too ahead of ourselves, but things like the institutional custody solutions and so on and so forth, prime brokerage, different ways of being able to trade, so on and so forth. But
when people want to invest in your fund, so they got to cut you a check for $250,000. Could they give you $250,000 of, let's say, Bitcoin? And then you would essentially
yeah,
take the
so
Bitcoin and then manage it?
yes, they could. So from an offshore standpoint, we would see potentially people doing that. It's a tax consideration, right? So that's really a tax question, which we don't provide tax advice. But what I've seen is people tend to send capital to us for the fund that are US based investors, and offshore in different jurisdictions, they have the capability just to provide us with Bitcoin, because you're basically swapping out your Bitcoin holding for a fund holding. And you would someone have to talk to their accountant to see if that was a taxable event or not. But in any event, so the issue is what's really important for us with all of our investment solutions, and kudos to these ETFs and ETPs that are in the marketplace because they give people an opportunity to have a first step in. But what was really important for us is that people are able to ultimately own the underlying exposure. We could talk about some of our other platforms and what we're doing and what other people might be doing in the space. But with our hedge fund, we provide either cash or in-kind distributions. So right now we're seeing people more sending in dollars, and then if they are taking distributions, they're typically taking them in kind.
So when I think about Bitcoin, I think most guys, early adopters, are sitting it with the Bitcoin in their wallet. And it's a very personal thing for them. They bought it, they hold it in their wallet, not your keys, not your Bitcoin. The
Mm-hmm.
newest investors are going out there, they're buying IBIT or other ETFs, but
Mm-hmm.
there's a lot of volatility with that, right? You're buying something with this very long-term view. This thing's going to go to $1 million. Bitcoin's going to 1 million, even higher. Samson Mao is very excited about where it's going. I think Saylor is too, obviously. And I think
Yeah.
in general, the market is feeling a sense of it's going to go higher. And I think of it as real estate, right? I know real
Yeah.
estate's going to appreciate in time, but there's going to be drawdowns. You know, in the 70s, townhouses collapsed in price in Manhattan, and the townhouse you could have bought for $50,000 is maybe worth 25 million today. There's going to be time horizons where it's horrible.
Yeah.
And
Yeah.
and what you're doing is you're adding in some derivatives to make sure that the drawdowns perhaps are less, so there's less volatility. Is that right?
Potentially, it depends on our product. So just to take a step back for a second. So we think there's right now our digital asset platform is really three different components to it. So one is this hedge fund. One is what I would call a wealth management platform, which is separately managed account platform, which has minimum $25,000, and people can access it simply and easily. And there are a number of other companies that have a similar type of platform. And a third, which is custom solutions, where we're taking people who have concentrated positions, 5 million plus, and we're using commodity link swaps that we can hold in cold storage the collateral for. So everything that we're doing, we're trying to custody in cold storage, and wherever possible, trade out of cold storage. Everything we're trying to do is in the US regulated ecosystem. We're a regulated company. And I think that's the crucial thing. So when we had in 2022, the big drawdown, a lot of companies had exposure overseas, and we're using options. So to answer your question from an investment standpoint, in all three of those, we have the capability to risk manage using cash. So that's our meat and potatoes. Was always identifying different algorithms, first technical with traditional assets, and then using on-chain data and integrating the two to risk manage with cash and adjust long exposure. So that's to me the most basic and effective way. Secondly, in our custom solutions and in our hedge fund, we're starting to use these commodity link swaps, which I think are very interesting and that I prefer to the other options that are currently listed in the United States, which are on futures, right? So it's, to me, futures, derivatives of derivatives, which the options on derivatives are a little wonky to me. So I like the idea of having collateral in cold storage and third-party control, and I think that's the big issue here with all these. But yeah, so options and hedging is one vehicle. And so the ecosystem as a whole right now is still unbelievably immature. So foundationally, the infrastructure exists to, in my opinion, to properly custody and to do the type of transactions that you would want to do to add value to a long only buy and hold strategy, although for some people that's appropriate too. In my estimation, we felt that, and this is not investment advice, nor is anything else that I'm talking about today. I'm just telling you my experience and what I believe. But in our opinion, somewhere along a 5 to 15% allocation, depending on someone's circumstances, is an appropriate place to start. Now, back in 2022, when we started investing in the space, that was like people thought we were crazy, like traditional investment firms, until BlackRock came out with their white paper and suggested that 80% would be appropriate for a growth investor and 12.5% would be appropriate for a conservative investor. So the way that I look at this whole thing is from an investment standpoint. I am very comfortable long term with Bitcoin. I think just like Netscape and AOL and 95 through 2000, these different blockchains, L1s, L2s, and lots of different things that are going on. I think we're still so early in the game. We're still looking at these things cycle by cycle, right? But from a financial standpoint, an investment standpoint, we want to optimize for risk and return. We try to identify investment strategies where we can get a 50% no more max drawdown, which is from peak to trough in a cycle. So if Bitcoin were to go down 80, hopefully we'll go down 40 or less. That's our objective. And then compound off of that higher level and capture between 80 and 100%. Now, hopefully we can do better. But if we just do that, then based on our assumptions as to long-term growth characteristics, we can give someone who might take 1 to 2% because of the volatility and give them create a return stream that is somewhere more comfortable for them and have a 50 to 5% allocation so that they can get a greater return in their portfolios, right? And so that's how
Now,
we see it on a risk-adjusted basis.
would you consider yourself a Bitcoin maximalist? It's called the digital assets. But are there other digital assets you're looking at considering?
Yeah, so in our fund and in our separately managed accounts, we do have Bitcoin Plus strategies. And so we do risk manage Bitcoin, Ethereum, and Solana right now. In our fund, we can have up to a 10% allocation in what we call altcoins, which is basically any digital asset other than Bitcoin. And we could talk about alt season and what that is, and different times, different digital assets maybe historically outperform Bitcoin, and maybe they will again this cycle. But we currently have some exposure in Solana right now is the only other digital asset that we're currently invested in. But I think there's lots of opportunity out there. And so we can talk about the different classifications of digital assets. We can talk about the different times that they may or may not outperform. So I spend a lot of my time looking at digital assets divided by Bitcoin, divided by Ethereum, divided by Solana to see which ones are outperforming at any point in time, and then considering why and whether they might be productive investments at those
Now,
times.
did you get into Solana because obviously it sounds like it's the next one after Ethereum ETFs hit the market, and now there's discussion of Solana ETFs. Is that sort of like the reason, or is it because it's top three?
No, I think Solana is an extremely interesting, one might say, evolution of Ethereum. They're not, I think institutionally, they're not where they want to be yet. Because I think if you're building your blockchain as a layer two on top of or your application on Ethereum, you're not going to lose your job as a CTO or at an institutional company, right? But what Solana is doing that's very interesting to me, maybe we could take a real step back. Both Bitcoin, Ethereum, and Solana are as layer one. They're foundational blockchains. And then what people have been doing to scale them is create layer twos to add functionality and then build applications on top of it. And maybe we'll stop there, or maybe we'll have 3 or 4 layers. It depends in different ecosystems, different opportunities. Having said that, what I find interesting about what Solana is doing is they're trying to create a layer one only application ecosystem. So they're trying to have unbelievable speed, unbelievable capacity, and have it be unbelievably cheap. And if we want to have something like securities trading on blockchain, global adoption in that regard, you need very inexpensive and very fast and a lot of bandwidth, right? And so what you can do by having the layer one is they created something called extensions, where from you and I standpoint, from a financial standpoint, they're building in the regulatory infrastructure into the layer one so that the layer twos don't need to exist, so that application companies don't need to go and build it. So like as everyone may or may not know, there's a huge issue with whether these tokens are or are not securities. And so having the functionality built into the base layer now, if I'm creating a new application and the token that I'm going to be creating is considered a security, I don't have to worry about building out that functionality or that regulatory framework because it's built into the layer one. So I find these things very interesting. And then on top of that, they're hopefully going to, looks like it's proceeding very quickly and is an upgrade called Fire Dancer, which is going to make them even faster. So you're seeing a lot of adoption there. So you want to look at network adoption when you're looking at these layer ones, and you want to think about what the technology is that's behind them. And of course, if I look out in the ecosystem, you asked me before, am I a Bitcoin maximalist? I would say yes, because if I look right now at the ecosystem and you ask me, you put a gun to my head and say, which one is going to be here in 15 or 20 years and survive? Bitcoin, to my mind's eye, is the only one we can look at right now and say, and having gone through the internet and seen so many companies and all the consolidation and the rebirth and consolidation, and 5%, they say, or something to that effect, of the market capitalization was accrued to, let's say, 10 companies. And we were talking Netscape, AOL in 95 to 2000, and those companies barely even exist today or don't exist at all. And Google didn't exist then, and look where that can happen in this sector as well. So that's why I was saying keep it focused. So Solana, yes, is where we see opportunity. I also see a lot of opportunity in what they're calling RWAs, which are real world assets, which is still very nascent and is something that the Solana blockchain is looking at. I think a lot of these meme coins, although we're not invested in them from a fund level or from a separately managed account level, I think ecosystems and network effects are unbelievably important. So if you create a community of millions and millions of people, tens of millions, hundreds of millions, billions, whatever it winds up becoming, even if it's around a dog or a picture of some animal, or it doesn't matter. Because if you have a passionate group who are part of that community, then they'll back up into that functionality that will eventually create a value proposition. Now, this is my opinion. So I think there's lots of interesting things that are going on. You have real world applications, other blockchains that are creating render where you have access to different excess computer capacity on your computers that you're giving others who need the capacity for, let's say, AI calculations and things like that. There are blockchains like Helium that are doing where they don't have the ability to build out extra towers because there isn't a cost function to it, that people can put routers and actually expand the capacity of a wireless tower and generate value from that. Just the blockchain in general is just so interesting and so misunderstood by people because at the end of the day, like, it's just a database, right? So Excel is just a database, right? I heard a great analogy the other day that really resonated with me. What is a blockchain, right? And why does it have value? And they were like, hey, you go into a bank and that's like the first layer of security, right? And hey, that's any database or any Excel spreadsheet. But then once you're in the database or in the Excel spreadsheet, you can just change the data. So anyone that has access to it can change it. That would be like walking into a bank and having just money sitting out there and just you could just access the money and anyone could grab it or anyone could do what they want with it, versus having lock boxes where you then need the bank to have a key and you to have a key and you to access your information or what have you. So there's just so many different real world applications and things that we're not even doing right now. Like, I think the primary focus of what's going on is reinventing the financial infrastructure. And there's lots of different things we could talk about in that area. But
they're talking now about like a strategic petroleum reserve, but having a strategic Bitcoin reserve.
Yeah, that's a whole, like, before we get there, I just wanted to say one of the things that, like, but we have things like our health records and our identity that we want to be able to share with others at certain points in time and then not share. And right now that information isn't custodied with us, but it should be, because it's our personal information, it's our personal identity. And so there's just so many different examples of this. You were saying, I apologize, about nation state adoption. If we want to talk about Bitcoin specifically, Yeah. I think a lot of countries are thinking El Salvador has been in, I don't want to say unbelievable success story, but I've been down there a few times and it's a burgeoning success story. And if we think about the United States, the current amount of debt that we have is astronomical. The refinancing of debt is happening somewhere between a 4 to 6 year cycle, and it's just getting more and more expensive to refinance that debt. But we're just going to have to keep printing more and more money until we resolve that, until we have significant enough GDP growth to offset whatever debt we've created. And it doesn't look like that's going to be happening anytime soon. You know, that's really a 10 to 15 year story from robotics and AI and productivity enhancements, and that's a whole other having if they're gonna continue to debase the currency, whether that's in the US, Europe, China, wherever, then that's the denominator of the value of assets. So if I own a home and it's worth $1 million and they double the amount of money in circulation, then the value of my home goes to $2 million potentially. But I didn't really get any appreciation, just the value of the dollar got cut, right? Because it's twice as much in circulation. So thinking about ways that countries can strategically back their currencies as they are devaluing them, because this isn't just a U.S. problem; it's a global problem that started from the financial crisis and then was exacerbated from COVID. Right? Is by in some way, shape, or form backing their currency with some basket of commodities, whether that be the S&P 500 securities, real estate, REITs, or commodities in general, whether that be gold or Bitcoin or what have you. So for me, from a Bitcoin standpoint, it's just a very simple story. I think people get like really in the weeds on this thing. It's supply demand, and the ETFs and BlackRock and Fidelity and large asset managers like Templeton and going out into the marketplace and beating the drum with their massive sales forces, you would think, and in my mind's eye, it's the first opportunity for individuals to invest in an asset class before institutional adoption has fully occurred. And because of the properties of Bitcoin, it's not been non-correlated historically. It's had a strong return correlation. The monetary policy, the new issuance, as you guys know, is programmed in. There's a fixed supply, 21 million. After the next halving, it'll be the most scarce asset in the world based on stock to flow. It's just really attractive from a financial standpoint. I don't know that we've ever had a fixed supply asset before that has institutional adoption just starting.
And it's becoming cool now to be an institutional adopter, right? Larry Fink's made it cool.
Yeah, I think about it a different way because I was talking to somebody about this the other day. So Blue Square is a wholly owned subsidiary. It's a division of our parent company, which is Blue Square Asset Management. And so we have a wealth management business, we have an asset management business, we have a digital asset business, right? So there's something going on in the wealth management industry right now where a lot of people, or there's a lot of M&A going on where they're trying to buy boutique wealth management firms, roll them up and make them bigger and then try to flip the big firm because you get a better valuation for a much larger company than you do a smaller company. And when I receive a lot of phone calls, which I probably get one a week, but I probably speak to somebody like once a month, in all of those instances, I say to them, I'm like, hey, look, wealth management business, very interesting. Oh, I'm very interested. But what I'm most interested in is how much can you invest in the hedge fund and how can we make the digital asset business that we've created that is I'm sure there are others, but one of the very few that are operating in a regulated ecosystem that provides a full scope of solutions and services that your clients might potentially need, at least today, and let it be the default for the platform. And so you'll get like the COO, the president, the CEO, and they'll be like, yes, we need differentiation. Yes, like all these different things. And then, but we need to talk to compliance. They'll come back to you and they'll say, we need 6 months compliance, not there yet. So there's like 2 or 3 different types of institutional adoption, right? So where I see right now is that if you're a balanced mutual fund manager, you're managing some balanced strategy for whomever in a separately managed account, and you're not adding 1 to 2% risk allocation to Bitcoin or Ethereum when it comes out or what have you, they could lose 1 to 2% in any investment on any given day. But if they don't do that and these things go up 5x, I think they lose their job because their underperformance is so significant. Whereas if they lose the 1 to 2%, which you and I don't believe that could ever possibly happen, but anything in this world is possible, then that could be like any other investment that they have that can go down significantly. But the wealth management firms where there's a tremendous amount of capital tied up and they're in these asset allocation models that the clients don't even know what potentially they're investing in, or they may know, but when they change it, the companies have discretion. So there's a progression there, right? Like the first progression is our financial advisors can recommend Bitcoin for our clients. And none of the major firms have done that yet. I think one of them will sometime in the third or fourth quarter, and then everybody will have to follow. And then the question is, and if you're asking, my thesis for this cycle might be that in the late stages of the cycle, they'll actually add it to their asset allocation models. And that will drive the last really big run up. But what's a little scary about that, in my opinion, is because they rebalance, right? So they'll be selling on the way up and not getting all of the return on a relative basis. And then they'll be buying on the way down. And at what point do the clients call up and say, hey, we're down 30%, you keep buying, take me out of the digital asset allocation models and don't ever put me in them again. And so then you could have an asset class that goes from 2 to 2.5 to 10 trillion. And then if the asset class goes down 80%, hey, that's $8 trillion of wealth that's, let's not say destroyed, but that's been short-term eliminated. And the emotional roller coaster as it pertains to traditional assets, people love to buy high and sell low. So in this instance, if they don't know that they're in the asset and then they find out about it, they're going to get out. So we might have this cycle may be a much bigger cycle depending on institutional adoption. And we also might have a situation where the bear market is slightly more prolonged than traditionally has been experienced over the last 4 cycles, because as the digital asset ecosystem has had a 4-year cycle to it. And I think that'll still continue, but I think maybe this one could be slightly different. Now, hopefully, institutional adoption as it goes on may create, and people believe it will smooth out the variability of the ecosystem over the long term. I don't know what the long term is, but what I can tell you is that, in my opinion, it's going to be many more cycles because it's still such a thinly traded on a relative basis from a supply. Right? There's only 20 to 30% of the supply is available. As more money comes in, the market cap goes up. It's more dollar terms.
Well,
But
on that note, can you tell the person that maybe isn't the financial savvy investor the significance of these ETFs getting approved and what type of signal that shows the masses that institutions are acknowledging this and that more is to come? And what does that mean? What is that a signal of?
On the one hand, just because the ETF is created, it doesn't necessarily mean that institutional adoption is coming. I think Doug, you mentioned earlier that Larry Fink was on TV the other day.
Digital gold, he calls it. Gold.
By the way, that is a very good way to think about from a simplistic standpoint, Bitcoin. And we know that there's more to it than that, but as a store of value, as digital gold, makes a lot of sense. And that's another thing we could talk about why. But so to get back to your question, what the ETFs do is you've got a regulatory stamp of approval. So that's one thing. So now, depending on what my investment policy statement says as an investment professional running institutional money, that opens up a wide array of people who no longer have to deal with the complexities that I was talking about before. Cold storage. Oh, it's how do I own it? It's a different asset. No, now it's just an ETF like any other asset. Interestingly enough, though, I think what many may not realize is that whereas the insurance that we carry from an investment firm standpoint on our traditional assets, that they exclude the Bitcoin ETF from that. And as far as I'm aware, it's one of, if not the only security that's not covered by my insurance. So one of the reasons that we're seeing wealth managers having a difficult time adopting or starting to adopt, but besides the fact that they don't understand necessarily, and I'm talking about RIAs and not these large wealth managers, but they have to think through in their insurance, they have to think through their advisory agreements, they have to think through their ADVs, their own compliance people need to get up to speed, and the majority are not, and besides the investment professionals are not. So for 1 to 2% allocation, that's a lot of work to integrate that into the bundle. But to get back to your point, the reason that it provides a gateway is because now you have the largest asset manager in the world and one of the most credible asset managers in the world, BlackRock and Fidelity, who are beating the drum, and others, but we'll just use the two of those as an example, who are beating the drum and who are out there educating institutions about this asset. And it's a simple, just demand, supply and demand. And I think if people can just look at it from that simple standpoint and not get caught up in it's a new asset, it's just a fixed supply, and the demand is very limited right now, and the supply is limited. But as the demand picks up from these ETFs, it's a major opportunity. But then I think they start going down the rabbit hole and they understand they want to own the underlying asset. And that's what the ETF in the US doesn't afford. Maybe at some time in the future it will. Yeah.
I think they're volatility busters too. Volatility, I'm from the currency world,
Yeah.
and you found out when a central bank gets involved, volatility collapses. The more the
Yeah.
larger players get involved, the more volatility starts to drop. If you think of like just an OTC stock that nobody trades, very volatile. If you
Yeah.
think of a share that everyone trades, less
Yeah.
volatile. And it's the same with currencies. I think it's the same with commodities, in that as the
Yeah.
larger players get involved, they're holding it for longer. They're not really just reading the news and what's on crypto Twitter and selling it and buying it on the back of that. And the more you get more institutional involvement and then government involvement, the less
Yeah.
volatility you'll probably see net on a day-to-day basis.
I think eventually we do get there once the entire ecosystem matures.
But you're going to see volatility start to drop over time.
Possibly, yeah. I
We're
think
still
over
at the
time,
start
yeah,
of the
but
cycle in terms of volatility drop.
the question is how long? Because if you have institutional adoption, what should happen on the way up is that they're selling. So that should make the peaks less. However, they're bringing in trillions of dollars in assets into an ecosystem where the float is hundreds of billions. You know?
Right. So now you're talking about omega candles.
Yeah. So, well, if that all happened at once, yes. But then on the downside, which is why you're saying that the volatility gets subsides, is because then they're rebalancing and buying as it's going down, and that should level the playing field. But the thing that I stress here is that these are very thinly, the supply, and all assets are different. So we're just focusing on Bitcoin right now. Let's just stay there for a second. The supply is very thin, right? So massive demand will drive up the price unbelievably. And while people say they're going to stay in it, even institutional investors, when it starts to go down, they may dump.
Everyone says they'll stay in it
really,
until they've got an emergency event, or they got to pay their kids' college, or they got to do whatever, and they get out.
Yeah, so you don't really know is the issue. And I think long term, your thesis is correct. I wonder if in the next 10 or 15 years, I don't know when that occurs. And so I think that's something that we should be looking for. And this cycle, we've seen it so far. We've only had this last drawdown 28%, but prior to that, we had, I don't know if I forget if it was 4 or 5 or 6, but they've all been in the 20% range. 23% range was the target. But if we look at last cycle, that was 40%. The cycle before had 50%. Now that's in the bull market. Bear markets have been still pretty consistent around that 80% level. And we'll just have to see what happens next cycle. And so that's why we think risk managing this type of volatility is important, because you want to stay in the asset class long term. Because if you could just buy and hold, like people, they just bought and hold Amazon, if they just bought and hold Microsoft and bought and hold, and it's Apple.
A lot of
portfolios.
Very easy
looking back. It's easy looking back and saying that it's not so easy. The ride wasn't so easy.
Well, I think a lot of portfolio managers as well, for whatever they put into their portfolio, they have to manage. There's probably gates that say you can't have something that's volatility over this amount.
Yeah,
which holds it from the portfolio. Another thing is a lot of real money firms, you'd think that they'd adopt it, but they need to go through all the prospectuses for all of their funds in order to put 2% in, and change the prospectus for each one of these funds to allow for digital assets to be added to the portfolio. And people don't understand that could be a 6-month process, because once again, it's going to compliance at these very large institutions that need to add in these different assets.
I'm of the opinion that eventually we will, let's say software swallows the world, that we will digitize the majority of assets. Whether the New York Stock Exchange has its own blockchain that it uses for settlement, or they're using one of the existing blockchains, or they're building on top of it, or whatever, I think everything becomes tokenized, because it's just a simpler, easier world. And takes out a lot of costs. And of course, with corporations that have moats, they want to protect those moats. But once it becomes a reality that they're not going to be able to, then they have to adopt. So I think the good thing for us as long-term believers in digital assets is that the tokenization of both stocks, bonds, commodities, real world assets, all these things, in my personal opinion, will eventually happen. And that will drive, because once the primary assets that they're investing in are tokenized, then it really doesn't matter. Right now, they have access to the entire ecosystem. How long this takes, how forward thinking are they? In the conversations that I have, you tend to see that people are trying to recreate the moats that they have in the traditional world, in the digital world. And history would say that's not how the game is played, right?
All the tokenization companies that I talked to, and I must talk to most of them, they all talk about how there's lots of issuer demand for things to be tokenized, but the hardest part right now is to find the consumer that understands what a wallet is. The UI UX just isn't there
No,
for everything to be
no,
tokenized yet. It's not quite as
no.
simple as going on to E-Trade and buying part of a building in Chicago.
Yeah,
And
yeah,
until it gets there, you won't have that. You need the demand there. Now, one of the reasons that Securitize is doing well with the BlackRock biddle is
yeah,
because they had Ondo Finance on the other side that says we've got a demand for a digital treasury. We've got retail demand outside the United States, so we'll take down all of it. And
yeah,
that's the kind of
yeah,
thing
yeah,
is you've
yeah,
got to find where the demand is first, find the
yeah.
demand customer, and then you're just picking and choosing which funds to tokenize.
I think so. Two different things. So the intermediate steps that you're talking about are, where is it interesting? One of the areas that you might see is interesting. I was at a presentation the other day on wine, where they said it's a 300 high-end wine, where it's a $300 billion market. It's a very hard market to access. It's a very hard market to store properly. And so if you have the proper entity or corporation that can create the operating system or the blockchain, for lack of a better term, for or tokenize those assets, then that becomes very interesting, right? We can go through all of them. I was having a conversation with my neighbor the other day about tokenizing his brownstone, where he rents out 2 floors and the other, and might that be an interesting thing to do? So I think what happens with every technology is what you just said, is that it's ubiquity, right? When people don't know that they're using the blockchain, but it's just being used, that'll be at the end, right? We have no idea, like I was talking about with you before, the premise of this, when Bitcoin was created anyway, was that you were going to be your own bank, right? You were going to custody all your own stuff and be your own bank. What we don't know is what that's going to look like yet. But in my own thesis, that means you have to own the underlying asset. Having a financial return on the asset isn't good enough. And so I've been speaking to some of the asset managers and some of the other application developers who are trying to create what you are suggesting, which is, hey, you want to be your own bank? Here's a way to start doing it. And these things haven't launched yet, and they're thinking about this. And so for the services that you are capable of understanding and operating yourself, great. But for the ones that you aren't, and you'd like to offer to your quote unquote customers, we're happy to do that for you for a fee, right? I'm seeing some of that kind of stuff. But from our personal perspective, what we're really trying to do is, and what we think is important, is to create the on-ramps so that people don't feel like they're investing in anything different. Because at the end of the day, I'm buying a share of Apple. How is that any different than buying a Bitcoin? Oh, I understand what Apple is. It has a real world product. If you ask clients and investors and you ask them about the stocks that they own, or the bonds that they own, the majority, and I'm talking not professional investors, but the majority of individual investors, yes, they have some knowledge, but the majority of them have no knowledge, really. Who's the CEO? No idea. Where are they located? Forget about all the other stuff. What's their new
And who
product?
are all the middlemen? Like, what's the
Yeah,
DTCC? Nobody cares. No one
yeah,
cares about
yeah.
the
Oh, where
sauce.
is it custodied? What? Yeah. But what is interesting about, if we're just going to talk about Bitcoin, so what is interesting is that at a minimum, there is no CEO, right? There is no, yes, it's impacted by macro events, but there is no board to dilute the shares. You have this thing, it's a really interesting thing I was talking about, I wrote about a little bit, with all the other ETFs, whether you have a stock, bond, or commodity ETF, when the flows go into the ETF, it's an opportunity for, and there are significant flows, and the price of the assets go up. It's an opportunity for the commodity manufacturers to make more increased production, for the bond issuers to issue more bonds, for the companies to issue more shares of stock, and the reverse for them to go into buy or to lower. And those all have different impacts on the dynamics, the supply and demand dynamic in the marketplace. But with Bitcoin, that's not happening. So what's going to happen to a fixed supply asset? The only thing that can happen, and we've been seeing it recently, and maybe now that's burned off, is there can be a supply overhang for various reasons, right? At a different point in times, people who are long-term holders or who are holders can make a determination that the price point is in an area where they want to sell it. Okay, but you and I both know, or we know, that there is a very passionate base of holders that have very long-term and very lofty ambitions, and they've ridden out one bear market, or maybe they've ridden out two bear markets, maybe they've ridden out three bear markets. So while they're willing to sell some to cover their short-term expenses, they don't care because they're not
But
selling.
even
So
there'll be financial things coming out soon where you don't have to sell. Instead, you can borrow against it, right?
well,
And we're already finding these types of things. Why sell and take the tax consequence if you could instead borrow against your own holdings?
yeah, once the regulatory and framework in the U.S. is shaped and the banks can actually custody the digital assets, and whether that happens this year or next year or in 5 years, then what you just said will become, I think, much more
Commonplace.
prevalent. Yeah,
It's like when
become
when
much
you have
more
an
prevalent.
equity portfolio, you can borrow against your own equities
Yeah,
to
yeah,
do whatever you
yeah,
want
same thing.
without selling.
Well,
Same thing.
this is why we created the custom solutions, which is it is a high net worth solution because you need to have to do swaps, you need to have what's called an ISDA. And to enter into an ISDA, which is an institutional contract with a third party, you need to be what's called an ECP, an eligible contract participant. And the requirements there are 5 million if you're hedging your position and 10 million if you're doing something other than hedging your position. But the reason that I like that structure is because think about all these people from Celsius and what have you that were trying to get yield on, let's just say, Bitcoin, right? They were hypothecating their Bitcoin to other companies, so giving their Bitcoin to other companies for 2, 3, 4, 5% yield. And look at the disaster that it caused. Crazy. I
Yeah.
understand why they wanted yield for the same reason you're saying. They're trying to not have to borrow against it, right? But why, I think in hindsight, and from my own mind's eye, why in God's name would you give somebody else? Why would you hypothecate, give ownership of your asset to someone else contractually? It's for me right
Nuts.
now. Yeah, for me right now, you said it, but for me right now, we could have a bad investment decision around our hedging program. I happen to think right now, personally, because we're in the bull market, that I'm looking. By the way, none of our products, and I think this is a really important person for anyone in the ecosystem. Leverage destroys people who invest in this. So I see these 2 times and 3 times ecosystems, Phil, back to your part, the ETFs, and I'm like, that this is not productive behavior for individuals, right? And so that's why we see these sharp moves too, right? Because we have these leverage long and leverage shorts, and they can attack that and force people to liquidate either long or short, and that creates a big run up or a big drawdown, right? But if I make a bad investment decision, okay, it's perfect. You're not going to bat 100, but I just don't want to lose the digital assets. I don't want them to be stolen from me. I don't want to enter into contracts with people where I'm getting some short-term benefit, but in the long term, something winds up happening. And to your point, we're doing for our clients what we do for ourselves. And I think most investment professionals eat their own cooking. And if they don't, that's a problem. My thought process is right now we're trying to get people to have meaningful exposure because we think it's going to have meaningful appreciation on a risk adjusted basis. But 5 to 7 years down the road, as the blockchains become ubiquitous, as this vision of you becoming your own bank or whatever the digital asset, and we'll say Bitcoin as a proxy, enables, then there's going to be other functionality that we're going to be helping people to enable. So I think we're in such early days right now in this ecosystem that I know people say the first inning. I don't even think we're in the first inning.
We just come
And
on the field.
yeah, we just
We
came.
just
I mean,
walked onto the field.
and I think this cycle is going to be an amazing cycle. I think the macro tailwinds are setting up. I think, and this is obviously our opinion on any of the forward indicators that we're looking at right now. There's always a possibility of tail risk, right, of something happening either around the presidential election or possibly a lot, major conflicts that are going on globally, and they could escalate in a way that would be detrimental. But and there's always something that we're not thinking about, right? That always derails. But if I look at the cycle right now, I'm seeing the triple things colliding, the trifecta, right? Which the trifecta is, I think the economy is recovering, and I see liquidity recovering, and we see deflation coming down in all our forward indicators. And so, to me, that says, historically, presidential election years are productive years in the markets, and we're of the belief that next year is going to be one of those like unbelievable years. And we could be
Yeah.
wrong. Again, this is our opinion.
Well, you got a president as well that is now discussing essentially a weaker dollar policy because he wants manufacturing to be in the United States. That's positive for Bitcoin. The possibility of us having a strategic Bitcoin reserve, that's positive for Bitcoin. As soon as the US gets into it, then everyone's going to get into it. It seems to me we're certainly pointing in the right directions right now. I think it's time for us to wrap this up, Jay, but let me ask you a question. If someone wants to get involved with your fund, do they go through their RIA? Do they call up their guy at Morgan Stanley? Or do they go directly to someone like yourself?
No, if someone wanted to reach out to me, by the way, I'm happy to help other financial services firms too who are looking at getting into this. So the easiest way to reach me is just in my email. It's jay@bluesquarewealth.com. Or if they reached out to you, Doug, you could introduce them to us. But I think really the great thing about this ecosystem, and this is how I'm going to end this, is one of the things that really attracted me to Bitcoin was when I realized I think it was 2001 Bitcoin conference. And I realized I was talking to some of the VCs and they were explaining to me about their companies and trying to get people to invest in them. And like whenever you have a VC, you could have a portfolio of 10 or 20 companies and they could all have great ideas and none of them could work because someone else executes the idea better. And then with Bitcoin, though, it doesn't matter who's executing the idea and winning because it's the benefits coming down to the token because any of the applications that are successful have to use the token, have to use Bitcoin. To me, that was just really incredible. So what I found in the ecosystem in general, and hopefully when TradFi gets involved, that'll stay, but certainly to the people who have been here for a long time, is that we're all willing to help each other because the value of helping each other accrues to all of us, whether someone does business directly with us or someone else launches some sort of business in this ecosystem that allows for them to have a successful on-ramp and create a greater demand for the digital assets. So I found this to be an unbelievably, it's so entrepreneurial right now, this ecosystem. It's so friendly, this ecosystem, and everybody's willing to help each other. And so that's one of the things I love most about it. But at the end of the day, again, we're a professional investor. We're here because there's investment opportunity. But there's so many other good things that are going on as a result of this. Whether it's banking the unbanked, whether it's lowering expenses and fees associated with financial transactions, whether it's allowing someone to have a global commodity that's neutral so that no one can take it away from anybody, allowing people to opt out of their financial system that they're in or the monetary system that they're in to a more stable one. And these are just a few of the many. Having a global platform, it just doesn't exist anywhere, right? Like we're very segmented. And so I just think tremendous opportunity. Yes, a lot of risks along the way that people need to educate themselves about, and a lot of opportunity. And I think we're all fortunate to be here. And I know for myself personally, every day I'm just learning. I learn so much every day. And there's just so much to learn. It's just moving so quickly. Let me just say this, is that first of all, thank you for having me on. Appreciate that. And secondly, more importantly, Phil, it's very nice. I know you and I have a newer relationship, but Doug, it's been a pleasure knowing you, and your listeners will be served well, I believe, through your choices and the questions that you ask those people, because I find you to be one of the most knowledgeable people in the ecosystem. And I love the name of the podcast. I'm a little insulted that's why you wanted to have me on, but Whitebeard is a tell. And but maybe if you have a really successful show and people are interactive, they'll guess how old I am based on my Whitebeard. That could be one of the questions,
All right, well,
if anyone cares about it. But
thank you very much, Jay. You're so kind, and this has been great. This is Jay at Blue Square Wealth. Thank you very much. Thanks so much for this.
Yep, and thanks for having me on. Really appreciate it.
Pleasure.
Cheers.
Cheers.